Jerome Powell is about to cause a recession. Let's talk about it. Hello everybody, Joe Warbeck coming at you. And tomorrow on Wednesday around 2 o'clock, we are going to hear from Fed Chairman Jerome Powell. And he is going to raise interest rates yet again. The last time he raised them 0.5%, or what we call 50 basis points. This time he says that he's going to raise them another 50 basis points, but we are beginning to hear that maybe it could be as high as 75 basis points, or it could be an entire 1% interest rate because he's concerned that inflation is still going up. We saw it at 8%, it creeped up to 8.4. Most recent numbers have it around 8.6%. But let's really look at that. What does it mean when we say inflation is up 8+%? What that's looking at is a 12-month time period. Where were prices a year ago? Where are they today? And remember, a year ago, we were still deep into a pandemic. We had just spent trillions of dollars to get us out of the pandemic. People were beginning to buy up goods and services like crazy. And today we're suffering from that. So yes, inflation is high right now. However, if we look at the 5-year average of the CPI, we can see that it's not 8%. It's around 3.6%. That's if we go back to 2017, CPI stands for Consumer Price Index. We look at what the CPI was back in 2017, we calculate it out to today in 2022, and we can see it's increased a mere 3.6% in the last 5 years. If we go back 10 years, it's gone up about 2.45%, and over the last 20 years, it's only gone up 2.46%. The Fed's goal is between 2 to 3%. So its 10 and 20-year rate is right on par. Its 5-year rate is a little bit high. But the reason that it has gone up so high recently is because of the pandemic and a little known mathematical fact called regression to the mean or reversion towards the mean. Basically, if you have an average, if your average is 3% and that average is running low, the only way you get back up to that average is by running hot, by running high. And you can see out of the last 10 years, 60% of the time, inflation was below 2%. 80% of the time over the last 10 years, it was below 3%. So this is normal. This is okay. Do the markets like it? Not at all. Does Jerome Powell need to raise interest rates? Without a doubt, we need to get rate increases out there. We need to get back to normals. We need to see CDs, bank accounts, checking accounts, savings accounts paying a much higher rate. But the markets hate it. I mean, look, year to date, we are deep into bear territory in the NASDAQ. NASDAQ's down over 30%. The S&P 500's down over 20%. The Dow is down about 17% as of the filming of this. And I have no idea what the markets are going to do tomorrow if Powell comes out and actually raises interest rates by 0.75, or if he takes that broad step, that gigantic leap, and raises rates by 1%. The markets could hate it. We could see the Dow sink into bear market territory as well. When I opened up the video, I said Powell's about to cause a recession. Now, what does a recession mean? The definition of a recession, I've said it on this channel, is when you have 2 quarters of GDP data that are lower than the previous 2 quarters. And we saw it. We saw the first time in a while, we saw GDP in the first quarter of 2022 fall from the high of the fourth quarter of 2021. And again, this should be expected because last year was one of our biggest years between the markets and people's spending. People had all this extra money from the bailouts and the economy was on fire. So of course, we're going to see it cool down. We need to see it cool down, and cooling down may become a recession. It doesn't mean the country is still not growing. It doesn't mean that suddenly 15% of the population is unemployed. It means that the country is slowing, and we need the country to slow down. We need this economy to slow down. We need to take a deep breath. But we need to be realistic and say, yeah, inflation's high for 1 year, but for the last 5, 10, or 20 years, it's normal. This is normal. This is healthy. The markets don't care, and the markets probably will continue to fall for the next 3 to 6 months. We could see all the indices in bear market territory. But does that mean that the future of the US economy is in question. No. Does that mean that we're going to suddenly crash and burn and inflation's going to hit 1,000%? Definitely not. It means that we ran hot. Now we need to cool off. This is a positive. Heck, even gas prices aren't as bad as they seem. If we look at the last 10 years of gas prices, if you go back to the average 10 years ago, about $3.60 a gallon, and it just exceeded $5 as a national average, that is only a 3.36% inflation on gas prices for the last decade. Exactly in line with where we should be, around 2 to 3%. It's just that everything was so cheap for so long. For almost a decade, we saw deflation in the price of groceries. We saw CPIs growing at below 3%, at below 2%, and we got lulled into a false sense of security that this is the way things were going to be. Now people are making more money. There's more cash sitting on the sidelines than ever, so we're going to have a time when we have to have rates go up, we have to have inflation go up for things to normalize. This is the way it needs to be. This is what's going to happen. We can't stop it. We can't change it. So as I said, if you watch my videos for the last 6 months, I said 2022 was going to be a heck of a bumpy ride. I'm not backing down from that. Put your shoulder pads on, put your helmet on, buckle in. This is going to be a crazy year. But at the end of the day, unless you need your money this year, unless you're planning on spending all of your investments this year, now is not the time to panic and go running for the hills, because this country is still strong. We have a lot of positives out there. But I am saying it looks like the markets are going to stink for quite some time. Do I know that for certain? Of course not. Could we get in tomorrow and Powell raises rates by 50 basis points and the stock market likes it, and we see a return to March numbers where the S&P is only down 10 or 12%, the Nasdaq's only down 20%? Of course it could happen. And the opposite could happen as well. So we'll have to wait and see. Tune in next week to see what happens when Powell makes his announcement tomorrow. Remember the positives, that your Social Security is probably going to go up almost 9% this year. So not everything is as bad as it looks. If you like videos like this, make sure you check out some of my other videos, subscribe for future videos, leave a comment down below for ideas, for things you'd like to see me talk about. And as always, I will see you next week.